Good afternoon, everyone, and welcome to this webinar on the federal budget that was handed down on Tuesday evening. My name is Peter Lacandro, the Managing Partner down here at Chan & Naylor, Melbourne. I hope that you're all safe and well, remaining positive and getting through the COVID situation that we've all found ourselves in over the past 12 or so months. As a team of professionals, we're here to assist you where we can across all the different federal and state announcements that have been held, obviously with the budget via the seminar updates, etc. And also we'll keep you updated with newsletters, conversations that we have, social media, texts and webinars, certainly like these ones that we do from time to time. The entire team at Chan & Naylor Melbourne are here to help you in the areas that you may need, both today and tomorrow, and please just ask and we'll do our best to assist where we can. Okay, so let's get stuck into the webinar and see if we can update you with what the federal government is proposing and how we can help you get financially sorted and help with your wealth creation. Okay, so firstly, a little bit about us. We're located, like I said, in Melbourne. We have two offices, one in Moonee Ponds, one in Wheelers Hill, and you can see the addresses that are listed. We've had many of you, since we've been allowed in 2021, come into the offices again, and we certainly welcome you in the future. Our services that we can assist with are all listed there, from tax and accounting to SMSF services, financial planning and wealth creation. We also assist with your personal insurances. We can help with loan brokerage, which is a big thing at the moment, along with bookkeeping, and many small businesses out there are also using cloud technology, and an example of that would be Xero. So certainly talk to us and we'll do our best to assist where we can. Before we get stuck into the webinar, please be advised, this is the insurance side coming out. This is general advice only. It is not being designed for your particular situation or taking into account your circumstances. More than happy to sit down with you, but I must recommend that you get the expert advice where required. So please, general advice only. Okay, enough of that. Let's get stuck into the topic of the federal budget. It's fantastic to have over 400 people registered for this webinar, so I thank you for that. And hopefully we'll go a long way towards helping answer some of those questions or doubts that you may have. Some of the discussion points that we'll look at, I'll talk to you about the highlights of the budget from Tuesday evening. We'll look at some of the key assumptions, which is very important from a government perspective. We'll look at some of the proposed changes for individuals. We'll have a look at also those for businesses and corporate entities. And we'll also look at any impact on your superannuation. There's a couple of other tax measures which I'd also like to talk to you about, along with what you should do next. Please, if anyone has any questions, feel free to use the comments tab on this link. And providing we have time at the end, I'll certainly do my best to answer them. I'm going to try and make sure I stay within the 60 minutes. And also we shall pop the copy of this webinar along with the PDF slides onto our website after this, and it'll probably should be up by the weekend certainly, but hopefully certainly a little bit earlier. All right, let's get stuck into some of the highlights that happened. So the budget the other night, Mr. Frydenberg, or the Honourable as they say, the federal budget was considered a balancing act between a better than anticipated deficit from the budget that was held in October last year and the need to invest in the future of Australia. Cynics would say it was a voter-focused budget, especially when you factor into account over $17 billion dedicated towards aged care. We had more money in the pocket of low and middle income earners. There was a lot to do with the COVID vaccine rollout. A lot of over $2 billion was promised for mental health and suicide. There was a lot to do with the women's economic packages and including childcare and funding to prevent violence, along with different royal commissions into the defence and veteran suicide. This year's budget will result in a deficit of about $161 billion. The good news is that that was some $52 billion lower than what was expected 6 months ago. So the government has used that as an opportunity to spend a bit of money. A lot of debt though, and budgets are predicted to continue, budget deficits are predicted to continue in the future, at least through until 24-25 financial year. And that'll create a lot of debt, which will need to be repaid by future generations. This budget, along with the last one for that fact, was all about getting jobs and more jobs and getting some confidence back into the economy. What's in it? There was plenty of tax cuts for individuals and businesses, and also some superannuation changes. Basically, the federal government is arguing that if they drive jobs and employment, it'll help the economy to recover. And they're planning to obviously grow the economy, create jobs, and that'll help secure Australia's future. Bear in mind, it's important to note that these are budget announcements only. They still need to proceed or be proposed and put forward in the respective houses in Parliament. So at this stage, it is not legislated. We will certainly keep you updated when things get legislated through our newsletters, social media, etc. So feel free to ensure that you continue to read the stuff that we send through. All right, looking at some of the key highlights. There was, for businesses especially, a fantastic thing. There was an extension of the temporary full expensing of assets, and also the loss carry provisions that were both initiated back in October last year. I'll cover those more in later on. There was the introduction of a patent box offering some tax concessions on income derived for both medical and biotech patients, which we'll have a quick look at also. There was some tax and investment incentives for digital economy, and there was also the well-publicised extension of the low and middle tax offsets. Along with that, childcare subsidiaries or increases for families, especially those of you that have multiple children in childcare. Like I said, over $17.7 billion over 5 years to reform the aged care sector, $2.3 billion on mental health infrastructure, suicide prevention, and different programs along those things. Nearly $1 billion over 4 years will be spent for women's safety. And there's also some new and extended home ownership programs, especially for first homeowners and single parents as well. Who were the general winners of the budget? Last year's budget was very highly criticised for doing very little to women. Obviously this year, especially with the recent controversies that have gone on, the spending on programs for women is more high profile, and Australian women would be considered the winners out of this budget, with some $354 million allocated for women's health, This includes things like cervical and breast cancer screening, depression services for pregnant women, along with programs for eating disorders. Also, almost $1 billion will be spent over the next 4 years to also combat domestic violence. First home buyers and single parents were also a winner out of this election. That'll be followed through with the home builder scheme that was introduced last October, helping another 10,000 people with their first home buyers to purchase that home with as minimal as a 5% deposit. Single parents, and they're estimating about 10,000, will be able to purchase a home with a deposit of small as 2%. Low and middle income families needing childcare. There was a $1.7 billion that was proposed for the childcare sector, and the government is estimating that this will benefit some 250,000 families, will be better off by about $2,200 per year, giving more parents, especially women, the choice to take on extra work. The catch is with this one, it'll only apply to families with more than one child, and the benefits, though, will not start flowing until July 2022 at the earliest. Road and transport or infrastructure around Australia was also, there's a lot of money poured into that, which I'll show you later on. So they're planning on pouring a lot of money. Why? To keep the economy ticking over, keep roads being built, and obviously many people in jobs and employment. And we'll have a little bit of a look at that later on as well. Some other quick winners, trainees and apprentices. So the government continued and extended the Job Trainer Fund, where it's expected that some 450,000 training places to upskill job seekers and young people will happen. Aged care, NDIS, and the mental health services, again, especially in response to the government's age or Royal Commission into aged care, they've dedicated $17.7 billion in what they call practical and targeted new funding to significantly improve the system. There's a few benefits for startups and small businesses as well. So basically the budget includes a number of measures to help small businesses, beginning with 1-year extensions to the full expensing program of assets, along with extending the temporary loss back tax provisions as well. So we'll cover that in a moment. They've also introduced what they call a patent box, and I'll follow with a few more details on that. And the other big one, which many of you will probably have a smile on your face, is around brewers and distillers. So the government has basically targeted this sector to try and promote, and the budget includes tax relief for both brewers and distillers to help support jobs and further grow the alcohol manufacturing sector. So they're basically waiving excise taxes that would be normally applicable there. So if you need further details on that, more than happy to come along and taste a bit of your product and certainly give you the advice that we need to. Wherever there's a winner, however, there are some losers. The big ones being universities. So obviously the budget, which I'll go through some key budget assumptions in a moment, the government is predicting that international borders will not open until mid-2022. This is basically going to depend upon the pace of vaccinations and probably what happens around the world, for example. Unfortunately, this budget did not earmark any specific funding for the university sector. Obviously, at the moment, it's very difficult because we don't have international students coming to Australia. And it's not just what they do at university, it's the extra money they spend in the various economies as well. Renewable energy, again, the government is moving towards zero emissions, preferably by 2050. So they've certainly, many have argued that that target is just too far away, and time will tell whether we'll get there. So probably not considered important. Migrants, obviously migrants are impacted at the moment from coming into the country. The government has also said from the 1st of January 2022 that basically any migrant will need to wait 4 years until they can access any government benefits. So this is expected to impact over 13,000 future immigrants, and it is estimated to save some $40 million over the coming years moving forward. And the other loser is small businesses looking to digitise. Basically, it was promoted or talked about that the government should be allocating revenue and helping small businesses to become more digital and move into that technology area. Obviously, that's helped many businesses stay afloat over the coming last 12 months. The experts have suggested that there should have been a bit more stuff there. It's a bit like keeping the light bulb half on and half off. And it's more short-sighted rather than long-sighted. Some of the key budget assumptions from the government, that they're looking by the end of this year to have the population wide vaccinated. So these budget announcements are based upon that. During 2021, they're still basically saying that there will be localized outbreaks of COVID, and effectively, you know, as we've seen, our state premiers, etc., may shut things down. So they've built that into their forecasting numbers. Social distancing and restrictions, hygiene, etc., will need to continue. There is no extended or sustained state border restrictions in place over the forecast period. So an example of that is what we all went through down here in Victoria last year, where we had an extended period of working from home for almost the entire second half of the year. So the government is not predicting or forecasting that to happen again. I hope to God they're right. And there'll be a gradual return to temporary and permanent migrants from mid next year. So obviously that means they're planning on not opening up the borders anytime soon. There'll be international students, as we quickly mentioned, will be phased. Programs will be hopefully by late this year to get them back into the country and start spending that money that the universities and the local economies are missing. Quarantine caps, though, are currently in place across all states and territories. They're hoping that that will be lifted later this year and the first half of next year. Obviously, we spoke about inbound and outbound international travel, not expecting through to the middle of next year. And that'll obviously then help with a gradual recovery in international tourism. Will hopefully happen after that date. So it's important to understand all these assumptions, because that helps the government predict or forecast all the numbers that they've provided. Okay, so after having a look at that, let's really get down to the nitty-gritty of what they're basically proposing. So for those of us personally, great news. The government is basically saying more money is to stay in low and middle income earners' pockets. Tax cuts, which were introduced from October last year in the budget, I would like to revisit that, because it's important to know what your tax rates are. And there's changes to different offsets that have also hit the media. and basically we'll cover that as well. So let's have a look at some of these changes to do with our taxes and what kind of changes will assist us with our wealth creation and more importantly, getting financially sorted. So the first one is low and middle income tax offset, and the short version of that is LMITO. It was due to end next month, so by the end of this financial year. The great news is that it's been extended for a further 12 months by the government. And in simple terms, anyone that has a taxable income of under 90,000, the maximum that you will receive as a tax offset will be $1,080. That then begins to shade out for those of you that have earned above 90. And if you're lucky enough to earn more than 126 in taxable income, you basically will not be entitled to this. And here is a little bit of a table which, depending upon your taxable income, will give you a little bit of an indication of where you will sit. The tax offset, or this offset, it'll be provided to you when your tax return is completed. So obviously, many of you, we have the financial year coming up for the 30th of June 2021. This certainly applies. So the quicker that you do your tax return, the quicker you'll get your refund or get this benefit, and the same will apply for next year. Okay. It's important, and this is all obviously from the previous budget, but I thought it was important to cover the tax brackets because this was basically advised in October last year. So in simple terms, you can see the tax brackets that are now operating basically from the 1st of July 2020. So when it comes to preparing your tax returns for this year, this is where, depending upon your range, this is basically, you can see the ranges have changed, and that'll determine the tax rates and the amount of tax that you pay. So please, if you have any questions, more than happy to answer those. These rates here do not include Medicare Levy, currently at 2%. And generally, they're going to save, again, for low and middle income earners are better off in that regard. Okay, also some personal things, self-education expenses. So for those of you that are undertaking self-education expenses relating to your current employment, as you'll be aware, or you may have been aware, there's been a rule for at least 20 years from when I can remember, that the first $250 worth of deductions for these courses was non-deductible. The government is planning on removing that threshold. Not even sure why it was ever there, but the good news is it'll be removed. This will take effect, though, after it passes Parliament, and I'm sure the government will give us a date that it will take effect from. Okay, residency test changes. So many of you out there, and we commonly have these questions with clients, are you a tax resident or are you not for Australian tax purposes, has been a very grey area. It's never been black and white, and there's different things that need to be considered. The government is basically replacing those tests with what they call a bright line approach. And that simply means someone that has physically been in the country, Australia, for greater than 183 days will be a resident for tax purposes. So this will get rid of the black and white, or the very grey areas, I should say, and will make it either a line in the sand, yes or no. Again, this is not law now. It will be basically need to go through Parliament and receive royal consent. Also, childcare is planning on changing, not though for another 13 months until the 30th or 1st of July 2022. So the government is basically saying that where a family or individuals have greater than one child in childcare, they'll be basically adding an extra 30 percentage points for every second and third child. And it's estimated that that will benefit some 250,000 families to continue working and encourage them to work. So pretty simply, if you have a second or third child, that second or third child will not pay as much to childcare because the government is planning on giving you some extra benefits or a subsidiary to get around that. However, that's not now or not next month from the 1st of July. It's still another 13 months away. Medicare levy is also changing. So basically currently, or any of us, here you go, if you're a single and you earn more than $22,801, we're all subject to Medicare levy. The good news is that is increasing, not by a huge amount, but there you can see, depending upon which category you fall into, there are slight increases before we will need to pay Medicare levy. Again, that legislation will be introduced shortly. That was it with individuals. There wasn't too much more to do with it, to be honest. Let's have a look, though, at the business side of things. So what has the government done? The big one, which has got a lot of media attention, is the temporary full expensing has been extended for 12 months, which will take us out to the 30th of June 2023. What does that mean? We've had many of our clients take advantage of this. And what it means is temporary full expensing currently allows eligible businesses to deduct the full cost of eligible depreciating assets. What is a small business? Where they have turnover of less than $10 million. A business will qualify for this basically from the 6th of October last year through to the 30th of June 2023, where the equipment or the depreciating asset is first used and installed ready for use. So we need to make sure you can't order something. It has to be ready and available for use and delivered, basically. Loss back provisions. They've also been extended for 1 year. So what that means in plain English is that there were many businesses during COVID that suffered a loss. They also may suffer a loss this year, depending upon what industry and probably what state you're involved or you operate out of. For example, many businesses in Victoria were shut for 6 months, if not more, and they've had restrictions imposed. What the government has basically done is they've extended it out to the 2023 year as well, where if you had a loss in 19 or in the 20 or 21 or even the 22 year, and then you make a profit, you can basically offset those amongst each other to help with the tax bill. Okay, there's been some changes to employee share schemes. So what it was there is basically the taxing point was when an employee left an employer, that would trigger straight away tax implications. The government is proposing to remove the cessation of employment as a taxing issue or a taxing point. So again, we need to get more information on this, but that could help when people are changing jobs or changing from employers. Bit of media attention was also this concessional corporate tax rate for medical or biotech patents income. So basically the government are creating what's called a patent box, which will tax corporate entities at a 17% tax rate, virtually halving the tax bill that they may be subject to. This measure will apply, though, not until the 1st of July 2022. And so we need to probably wait for further information there. But what they're basically trying to do is for medical research, biotech research, for our Australian companies to create further further medicines and further vaccines, and to put us ahead of the pack when we compare ourselves to the rest of the world. A couple of other changes. Intangible assets, there's the option to self-assess. So basically, this will allow people, and examples of that would be intellectual property, in-house software, rather than using the ATO effective life rules to determine how quickly someone can write these off. The government will basically allow taxpayers to bring deductions forward and self-assess to a shorter life rather than to the statutory life. And we also quickly spoke about small brewers and distillers. Like I said, the government is exercising or is talking about removing excise taxes for these small brewers and distillers. So currently, basically, there's $100,000 per year per cap. The government is talking about more than tripling that to $350,000. And again, that's considered to take effect from the 1st of July 2021. It will need to pass through Parliament though. So that's it with the individuals and the business, and I'm wary of time to keep churning through this. So I'm sorry if I've skipped through anything more quicker or you need more explanation. I can see there's a couple of questions and chats, so I'll come to those towards the end if I can with time. Tax compliance and integrity by the ATO is very important as well, and this was a specific section in the budget papers. So the first one was all about small businesses being able to pause ATO debt recovery. So many small businesses over the last 15 or so months have found it difficult, even with all the different government incentives provided, to repay ATO debt. And many, we've spoken to some clients that they've actually got a dispute with the debt that they owe the ATO. So where that debt is currently with the ATO, and there is action going on with the AAT, which is a government body, basically small businesses have the ability to pause or to not pay that until this debt is sorted out with the ATO. This may include where businesses are given garnishee notices or the recovery of general interest charges or other related penalties. My recommendation though, don't fight with the ATO where possible, because I don't see too many people win, to be honest. So we need to work through your particular case, and we're certainly here to assist if we can. The ATO have also, or they're looking at foreign investors, or they're also basically looking to encourage and support new businesses into Australia. So this is something that they're looking at introducing, and it's basically to encourage people to start, especially foreigners, to start businesses here in Australia. And they're looking at getting rid of some of the red tape. The objective, like I said, it's simply to encourage investment by foreigners into Australia. Superannuation. So this has been certainly over the past budgets, we've seen many changes to superannuation, and we weren't sure what to expect prior to the budget on Tuesday night. The good news is that there weren't too many changes, and the ones that they've actually have talked about introducing are some pretty good benefits from my perspective. So the first one is the superannuation contributions work test is going to be repealed in about 13 months from the 1st of July 2022. So basically, as it stands at the moment, currently individuals that are aged between 67 and 74 are only able to make voluntary contributions to super if they satisfy the work test. So that's where they work at least 40 hours in a 30-day period within that financial year. The government is looking at scrapping that, and basically any individual under the age of 75 will be allowed to make or receive non-concessional contributions to their super. So it's encouraging people to tip money into their super. Again, this is not law. It needs to go through Parliament and get royal assent. So let's stay tuned for more information in that regard. SMSF residency requirements are also proposed to be relaxed, which again is probably a positive thing, because we've had many of our clients, for example, that are looking at setting up self-managed funds, or perhaps work requires them to go overseas for 2 or 3 or years to work, and then their intention is to come back. That has caused real problems with the residency of a lot of super funds. So the government is basically looking at relaxing that and changing the safe harbour rules from a 2-year period away to 5 years away. So removing that requirement for active members. So ultimately that will give a bit more flexibility and will hopefully help those already in supers where their circumstances may change, and encourage others to look at self-managed super as well. There was also, which got a bit of media, downsizer contributions reduced to the age of 60. So what this is doing is, again, if people sell their home, it was age 65, so it's been reduced to age 60 from the 1st of July 2022, where the government is proposing that each member, so per person, so that'd be 600 for a couple, could basically tip in up to 300,000 into their super fund from downsizing their home, and there would be no major tax implications in doing so. And contribution rules for this particular idea or rule would be relaxed. The one catch, it will need to be done within 30 days after the home changes ownership. So settlement that would be. And again, this is not proposed to come into play until July 2022. So let's wait for the official confirmation through Parliament. Another big change with superannuation is the removal of the $450 per month threshold. So as it stands right now, any of you out there that have employees, or maybe, you know, your daughter or son does a shift or 2 a week at McDonald's but doesn't earn $450 per month, currently employers are not required to pay super on their behalf. From the 1st of July 2022, it's proposed that no matter how much an employee earns, that super will need to be paid. So this is if your daughter does a 4-hour shift once a week and they earn $80, then your boss, or their boss I should say, will need to pay super on their behalf. This is probably, I'm not sure the intention of it. It's obviously to help people build their super. Not sure if it's going to help employers out there though, with casual employees and things like that. So let's wait and see in that regard. Again, we have it's not till July 2022 that this is proposed. For also, we've mentioned this previously in our different newsletters and webinars that we've done. However, I just wanted to touch on it again, that the SGC is changing, and it will change from the 1st of July 2021, so in about 6 weeks. For all the employers out there, currently you're paying 9.5%, or you should be, of what we call ordinary times earnings. In about 6 weeks, from the 1st of July 2021, it's going up to 10%. And then, as you can see, each year thereafter, it is legislated to continue to rise. So by the time it hits 2025, the SGC rate will be 12%. Now, also bear in mind, these increases will affect an employer's work cover premium. It will affect payroll tax as well, if that's something that you're subject to through the appropriate states and territories. Great. It'll improve workers' retirement benefits also. It will be costing employers. So therefore, my recommendation to all you bosses out there or employers, please factor this into account when you're looking at wages increases, etc. They might seem like small increases, but for example, if you have $1 million in wages, currently it's costing you $95,000 in super. In a couple of years down the track, it'll be up to $120,000 worth of super. That's not taking into account work cover premium increases, payroll tax, and also the normal CPI increases, for example, that you may pass on to your team. So just wanted to mention that as well. That's it around the superannuation side. Some other quick measures. There are some major road, rail infrastructure projects across the Australian states and territories. What they call shovel-ready projects are very high on the government's agenda. And in this case, every state or territory is certainly a winner. The intention here is to create activity, create additional jobs, boost productivity, and obviously provide long-term benefits to all Australians out there. Now, I'm not going to go through every single state, because remember, you'll be able to access our slides on the website. But for example, New South Wales, these are all the different projects and the amounts proposed. Here in Victoria, very similar, all listed there as well. So we've covered basically each state and territory, from Queensland also, Northern Territory, South Australia, Tasmania, and finally the ACT. So have a look at the state that's applicable to you, and that'll give you a bit of indication of what the government are proposing. The government did make it very clear, though, that these are the projects we're funding. These are the amounts. You either take it or leave it. You can't allocate it to another project. So that's been very clear in the budget papers as well. So again, just wary of time, we've got about 15 minutes to go. I just wanted to cover a couple of things from the previous budget that I thought was worth mentioning again, considering it was only some 6 months ago. A couple of these are taking effect in about 6 weeks from the 1st of July onwards. So let's have a look at a couple. The first one is a CGT exemption for granny flat arrangements. So this is basically designed to encourage people to build that granny flat and have our parents stay with us for longer, perhaps out the back of our house. Capital gains tax exemptions will apply for those things. So if you need more information, certainly yell out. We spoke about full expensing of eligible assets through businesses. So that was brought in on the 6th of October last year, has now been extended for 6 months, which is fantastic for those of you out there running businesses. So that'll just give you an immediate tax write-off, which will help save a bit of dollars in your pocket. Job maker, so again, small business depreciation write-offs. So again, this will allow us, when we're working on your accounts and your small business profit and loss and balance sheet, we may have the ability to write off your pool balances or assets that you've owned for a number of years. which will give you a immediate tax deduction and save you some taxes now rather than in the future. Be very, very wary with those last two rules though, or incentives. Fantastic, you get to claim the depreciation now. That means you have less of a taxable income, which equals less taxes to pay today. Be very, very careful though, because if you sell those assets, for example, a motor vehicle, if we've written it off to zero, because we're allowed to do that, and then you trade it in for $20,000 or $30,000 or sell it privately, then you could have future income issues and possible CGT assets, GST implications may arise as well. So if you need clarification in any of that, just let us know. Insolvency reform. So this was a big part of during the COVID pandemic, where not just at last year's budget, but also earlier, that the government introduced some insolvency reforms to basically get rid of a lot of red tape. And those businesses that unfortunately didn't survive or were cash flow strapped, the government basically is looking at assisting them to clean their affairs up sooner and at less expense. So that is all taking to effect right now as we speak. So that was it with a lot of the budget. A couple of things that I just wanted to bring to your attention while I have you all. ATO audits, reviews. Be very, very careful that the ATO, we've found, is starting to ask questions. They're starting to now chase outstanding debts, outstanding lodgements, etc. Over the last 15 months, the government, with the help of the ATO, has spent a lot of money and has done a lot of stuff to keep many people in jobs and many businesses afloat. Please ensure that you've got your record keeping in place. The ATO is now asking questions. They are chasing outstanding amounts. They are now imposing general interest charges again, where we had a little bit of a holiday period, if you like. So be very, very careful. They're watching. Just like you and I are trained to do our jobs, the ATO are trained to do their jobs, and they are ramping up and using technology to the best of their ability, even things like averaging programs, to look at areas and to look at taxpayers to audit and ask questions with. So if you need any advice, please talk to the team. We're more than happy to help. Wanted to mention quickly wealth and financial planning. What effect has COVID-19 had on your super, on your insurances, and on your different investments? What does financially sorted mean to you? Basically, there's no time like the present to look at getting yourself sorted, looking at reviewing what you have in place or what you should be doing. You know, I've had many clients reach out to me over the last 6 months, basically saying, Peter, I'm retired. I had my money sitting in a bank account. It was earning 4 or 5 or 6% in a term deposit. Now I'm lucky if I get 0.6% in earnings. There are options. You need to talk to us. I'm not saying every option suits every single person, but more importantly, what are you doing to get yourself financially sorted? Contact myself, contact Daz, being our financial planner internally here at Chan and Naylor. We're more than happy to listen, answer any questions, and see if it's something that we can assist you with. The other part of that, which is in one way related, is banks. So as we all know, the property sector market at the moment is absolutely booming, certainly here in Victoria. You go to auctions and I can't believe the prices that some of these properties are getting. Many of the experts are basically saying a lot to do with that is such cheap interest rates going on at the moment. The banks at the moment are hungry for the right client. Any of those or any of you out there that have investment loans, if they do not start with a 2, you need to be asking questions. Those of you with your private homes, if the loans are not starting with a 1, which is never seen or heard of, then you should be asking questions. I know here at Chan and Naylor in Melbourne, we have Lucy as part of the team, which many of you have utilised and speak to regularly. We look at your loans, we review the loans annually, and we make sure that you have the best deal possible. Contact Lucy if you like around that, and we're more than happy to look at your loans and see if we can sharpen that pencil. The bank is not going to knock on your door and say, Merry Christmas, we want to save you some money. They're basically going to continue to take the repayment from you, and it's important for you to go shopping to save some money, and more than happy to look at it for you. So again, just yell out. Let's keep the banks honest. The other part of that, as I promised, this webinar will be added shortly after this presentation, hopefully within the next 24 hours. So please feel free to look out for that. The web page where you can access it is listed there. And you can watch it again if you missed anything or would like to just double hear something again. You can download all the slides that I've presented with. Also on that page is other webinars that we've done previously, whether it was last year's budget, whether we've done property webinars, JobKeeper webinars, etc. I'll also be planning, so keep an eye out in your inboxes to do a bit of a tax strategy and tax planning webinar later on in this month. So keep an eye out for that invitation. Also jump onto our website and check out other pages. There's plenty of free resources, calculators, brochures. If you haven't already, sign up to our newsletters that we send out on average twice a month. Social media links can be found there as well if you prefer to check out Facebook or Instagram. So again, follow all that stuff. It's there for you. Let us know. There's occupation guides. So there's about 30 or 40 of those. So tax season's coming up shortly. If you're a nurse, for example, and you want to double check that you're claiming all the things that you should, then double check, download the occupation guide, and that might help you get a bigger tax refund. There's also a hell of a lot of material on property, investment properties, etc., structuring that you may benefit from and have questions from as well. What should you do next? So our focus, it's all about educating our clients, and we'll continue to do this proactively through webinars like this, seminars, newsletters, consultations. Please ask. We're more than happy to answer any question. Your focus, especially now coming out of COVID, and hopefully we've seen the worst of it here in Australia at least, invest in yourself. Read, speak to the right people, surround yourself with the right network, webinars, discover opportunities that might be out there. I have a saying that I always go by. If you do what you've always done, guess what? You'll get the same result. You need to change things to get different results. So certainly look at that. In relation to those out there that own businesses, is your business okay? How's it going with cash flow, budgets, forecasting? What do you need to do to get financially sorted? That's the big key. Business has changed. Has your business changed, and is it changing to ensure that you won't get left behind? So that's very, very important. Talk to us today if we can help. Again, build a network of experts around you, from your property advocates to an accountant to financial planners, loan brokers, solicitor, etc. We're all here to help, and you need to ask questions, definitely. Your business, one thing I would suggest, or even our personal wealth and superannuation, what are your numbers? There's technology like Xero out there that can help. But if you don't know what your numbers are, how can you actually improve what you're actually getting or the results are today? So very, very important to use technology to your advantage and make sure that you understand what your numbers are and how you can improve. So before I just conclude, I notice there's a few different questions here, so I'll do my best to answer them. Joy has asked, has the upper income threshold for childcare subsidiary changed? I'm not too sure, to be honest, with that one off the top of my head, Joy. Probably the easiest thing would be to ask your childcare centre, and they should be able to hopefully answer that. The other way would be remembering the changes that the government have proposed are not legislation yet. So until we actually get that legislation, that'll be basically confirmed at that point. John has asked the question, the biggest budget assumption is Australia is so reliant on China continuing to buy our iron ore at high prices, and Australia is so reliant on the revenue brought in from international students. Yes, I agree with that. Both these areas are high risk. How are we going to reduce our debt? Where is the revenue being generated in 10 years' time? I see little discussion about these areas. Australian citizens aged in their 20s and 30s are being left with a major burden in forthcoming years. Not sure how to answer that. There's a lot in that, John. Yes, we have created a lot of debt, and there is that debt will continue to rise in the short term. Yes, we are heavily reliant on China. I do not have a crystal ball of what the government are proposing in terms of how are they going to repay that debt. Will there be increases in taxes? When will international students get back into the country? What are some of the proposed changes that will happen? Probably a lot of it depends upon future governments as well and the path that they go down. I suppose the only thing I would say is here we were 15 months ago at the beginning of March. The world was supposedly going to blow up with this COVID pandemic, and the government had to make decisions on the fly to do and protect what we all have today. Overall, I think they did a good job. What the future holds, though, who knows? Picture what we've gone through over the last 18 months, and if you would have made a movie about it, it certainly wouldn't have been put in the true basket. You would have presumed that it was all made up. So all we can do is worry about today and look after our own backyard, and that's why it's important for you personally to get financially sorted and what you need to do. Okay. What else have we got there? Sorry, just checking. We had someone with audio. Looks like it's all been sorted out. Does the childcare subsidiary include those parents with children in after school care, or a vacation care? Off the top of my head, I'm not sure, Miriam, to that one. Again, I'd need to dig into the fine print of what the government is proposing. And again, it needs to, sorry to give the same answer, but it needs to go through Parliament. So let's double check what happens there and see what the law holds. It's not proposed to happen, like I said, until 2022, July. So there's a bit of water to go under the bridge, I'd imagine. Are there any benefits for property investors? Basically, there were no changes to property investment. So as it stands right at the moment, things will continue. As I said, the property market is booming out there. So certainly if you need assistance with your property or with future prospective properties, please yell out to the team. So thank you, Satya. And what changes are there to super? So we covered that in the presentation. So we'll see if many of those go through Parliament as well. What happened to WA? Did I blink? Sorry, I must have forgotten. Now, I think if you mean the road infrastructure area, if I've forgotten, I apologise. What I will do is, before I add it to our website with the slides, I will ensure to add a slide to do with WA. And my apologies, I didn't deliberately leave it out or anything like that. So thank you, Julie. And I cheat you. I hope I pronounced that correctly. Thank you very much for your informative session. No problems at all. We're more than happy to help. So as promised, I wanted to finish right on 1:30. I thank you for taking the time to join us firstly today and to register. Feel free to reach out, talk to us for assistance. Couple of things to do next. We spoke about banks. We spoke about the need to get financially sorted and talk to Daz as our financial planner. Talk to us for any assistance, any questions that you may have. Make sure that all your compliance is up to date with the ATO. So BASs, tax returns, super, etc. And make sure you're doing your homework to minimise any liability, obviously legally, that you need to pay. It's time for you to get financially sorted. So now is the time for you to follow up. Like I said, we will follow up with an email to links for today's recording and slides. Will all be popped on our website, certainly shortly, hopefully, and you can feel free to have a look at that. If any of you have any questions, probably emails are easiest to contact us by. Telephone numbers listed, along with our website, where we have many, many resources available for your benefit. We will be following up this afternoon, I believe, or within 24 hours, about a full-blown financial federal budget update to our database. So stay on the lookout for that. And thank you for joining. I take care and be safe. Cheers. Bye-bye.